We got another great panel ahead of us here, addressing infrastructure's legacy challenge. As a reminder to the audience, use the Q&A and chat functions to the right-hand side of your screen. Chat is amongst the audience members themselves. Q&A is for the panel, so just throw a question in. We'll try to get to them towards the end. Now I'm going to turn it over to our esteemed panel. And leading us off will be Andrew Atherton of Union Square Advisors. Joining him is Patrick Sells of NYDIG, Nathaniel Hartley of Mantle, Sue Laws of Temenos, and Loveleen Sidhu of BM Technologies. Andrew, take it away with the panel.
Great. Thanks, Todd. So thanks, everybody, for being here today. I'm Andrew Atherton, a Managing Director of Union Square Advisors. We are a technology-focused investment bank. I'm very excited to be moderating this panel today. We're going to tackle a key topic on everyone's mind, infrastructure, in this case, technology infrastructure, as it relates to the financial services sector. So let's go ahead and get going. So fueled by a broader digital transformation, this past decade has arguably seen fastest evolutionary changes to the global banking system in modern history. Thanks to an influx of capital and renewed entrepreneurial focus, the fintech sector, along with greater consumerization of tech, call it the Apple effect, banks are now solely focused on quickly bringing modern, easy-to-use solutions to their customer experience. We're going to be focusing on existing incumbents and new are tackling these challenges. So let's go ahead and hear from this great, diverse group of talented financial technology thought leaders to get an understanding for how they are approaching this infrastructure challenge. So the way this will work is I'll kick off with the first round of questions to each panelist. Second round will be the same question to each panelist, and along with the third round as well. So we're going to start off with Patrick Sells, who focuses on cryptocurrency, which is probably the most interesting person on this panel, myself included. So Patrick, we continue to see crypto become ubiquitous. How do you work with financial institutions and other bank vendors to make it a more accessible asset class and more available to the masses? Additionally, where are we on crypto's journey to becoming a more mainstream asset class?
Awesome. Thanks, Andrew. It's great to be on. I feel like that was almost a beer commercial for Dos Equis, the most interesting beer made in the world. But to answer your question, let me begin by kind of providing a framework for how kind of see what's going. Obviously, there's a lot of activity in the space. And I think I want to make an important distinction, at least in terms of how I understand and we at NYDIG do, that there's cryptocurrency and then there's Bitcoin. And Bitcoin is, I think, uniquely different. And because of that, much of kind of the comments I'll have will be kind of colored through that lens. And it starts with understanding that Bitcoin is an asset, it's property. That's how the IRS treats it from a tax standpoint. And asset ownership has been a critical part of the American society and the American dream, right? The American dream is synonymous with owning a home, owning an asset. And you see financial institutions in this country have always been the primary gateway for us to get access to assets and build wealth. The home is probably the most obvious and kind of common example, but you can also think about that in terms of our businesses. Those are also assets. Financial institutions provide the financing we need to grow those businesses or to start a business. And so you see, I think there's a link between financial institutions and access to assets that's critical. It's always been there. And so now as we think about Bitcoin, which is an asset, you can make the argument that it's really imperative and almost kind of a moral cause that financial institutions should make access to Bitcoin easier and more available, and it's not today. And so how then does NYDIG work with financial institutions to make that happen? We take the position that we want to help all financial institutions today offer Bitcoin products and services. We're not trying to be a new type of company or a new type of player, and instead come alongside, whether that's the actual financial institution or the existing financial technology providers, whether those are the big cores that we know of or many of the fintechs that are here attending this conference. Is we want to partner to kind of strengthen and enrich around access to this asset class. And we do that in a myriad of ways. A couple of the kind of the key products that we'll be bringing to market with our partners this year are a Bitcoin trading platform, so allowing you to offer inside your existing mobile app or online banking 24/7 trading the way that you would experience at Cash App or PayPal, but also in kind of some unique ways. And again, it goes back to this role that financial institutions have played in access to asset ownership, and that really trying to reduce the friction and make it easy. And so one of the products that we have is a Bitcoin rewards engine. It lets you take a debit card or a credit card, and the customer on the other side or the company can earn Bitcoin rewards back instead of dollars. Or our Bitcoin interest enhancement product, which lets you take something like a savings account and you can elect to have that interest paid in Bitcoin instead of dollars. And so really thinking through the existing banking product offering and saying, how do we add Bitcoin to that? And how do we help you offer this to your customer and play a role behind the scenes? And so I think now kind of technically how we do that, and the theme of this panel, one of the challenges that many financial institutions face is they are restricted, or they don't have the ability to just easily add new code or do integrations, right? That's why, again, probably many in this conference are here trying to help. You have to make it easy for financial institutions. And so we're very focused on partnering with existing technology suppliers so that regardless of who you're working with, it's an easy integration. And then also compliance. I witnessed as a banker watching so many of my kind of banking friends struggle with embracing new technology, not because they didn't want to, but because when oftentimes you're looking at something new, you have to think about how do I come up with a safe and sound kind of process for offering this when I've maybe never done this before. I know this is something that Nathaniel and I have spent a lot of time talking about. It's not that many banks don't necessarily want online account opening. It's just I've never had to write that risk assessment, if you will. And that fear holds us back. And so we're very focused on how do we help our financial institutions, our partners, understand what's needed from a compliance standpoint. And we think in helping solve that and helping make the technology easy, it will allow banks and credit unions and fintechs to be able to offer Bitcoin. And this really, where I'll end it, in the end of your question around kind of the mainstream notion around this. I think today we see that about 22% of Americans own Bitcoin. So you could argue that it is mainstream already. But I think what stands out is when you look at the 78% who don't own Bitcoin, it's not that they don't want Bitcoin. In fact, the majority, or 51%, would like to access Bitcoin if they could through their existing financial institution. And so all of a sudden, I think when you've solved for how you bring in new technology to existing financial institutions through integrations and a focus on compliance, now they can offer it. Bitcoin, goes mainstream. It really is imminent, and it's around the corner.
Yeah, thank you, Patrick. That's great. It feels like a lot of the key themes we're going to hear about today are related to the reduction of friction and improvement of access, broadly speaking. Loveleen, you're up next. So you are a challenger bank. You operate in a very competitive environment. You're a newly public company. How do you differentiate in that crowded environment? And how do you think about layering in new services, for instance, crypto or mobile loan applications, to keep those customers in your ecosystem and keep them participating and interacting more with your bank?
Sure. Thanks guys for having me. I'm excited to be here. So firstly, absolutely, it's a crowded space and more players are coming in every single day. And so differentiated, making sure that we're clear about our value proposition, our differentiation is key. And there's a couple things that definitely stand out. First, as you mentioned, we are the neobanking fintech to go public. So that is a differentiation for sure. And that move really provides us, a couple of benefits, all the way from, deeper sort of access to capital, the ability to better attract and retain our talent, and really to have that public currency to do really innovative, strategic, opportunities down the line. And I think we're going to see a lot more consolidation and sort of partnership opportunities. And I think having the public currency definitely positions us well for that. Number two is we do believe we are the first, if not the only, neo fintech that is profitable at this point. So we have found a way to not only continue to advance our growth, but to do it in a way that is profitable and sustainable, and to be a public company I think that public company investors demand that. And so we've been able to achieve that. And how have we been able to achieve that is probably the third point of differentiation, where we have taken a B2B2C approach and a banking as a service approach to really fuel our growth. And that has allowed us to be able to do high volume acquisition of bank customers at really low cost. And today, we have publicly stated that our CAC is under $10, which in the banking field is quite small, when it's typically $300 to $1,500 to really acquire that bank account customer. And we do this through partnerships. So today we have unique contractual relationships with 725 campuses across the country. That gives us the unique opportunity to really create an extraordinary customer acquisition funnel where 1 in every 3 college-bound students goes to one of those schools. And we're opening several 100,000 accounts with that very attractive student demographic today. We also have a partnership with T-Mobile. We launched T-Mobile Money, and that has really shown exponential growth, especially over the last year as a product. And third, our most recent partnership with Google, where we're really attacking the open market through a joint partnership, as well as providing a unique offering to our students. So, that's a little bit about our differentiation in the neo banking space. And to your second question about, how do we sort of think about layering on new services? That is the name of the game. We constantly have to think about how do we continue to innovate, listen to our customers, create more opportunities to solve more pain points for them. And how we do that is to truly create a full digital banking platform. And that means that we have banking, we have lending, and now we're expanding into advice, testing, and crypto. And so when you have that full stack, that full digital banking experience, that is what leads to the engagement, that retention. And really, how do we prioritize that is talking to our customers, understanding their pain points, and then to our partners, like T-Mobile, like our colleges and universities, what pain points can we solve for them? And that helps us prioritize what products and services we roll out first.
Very helpful. A profitable neobank is certainly a unicorn. So kudos to what you've built and continue to build. Moving to Nathaniel, and congratulations on the recent capital raise. Certainly an exciting data point in your young company's life. So, and a real validation of some sorts. So, as you know, today's customers want everything 5 minutes ago. Mantle has made the customer onboarding experience that much easier, and you're helping solve a real problem that financial institutions have. How are you working within the construct of existing banking infrastructure, and how are you smaller financial institutions to progress along their financial technology journey?
Definitely. So, look, I think the legacy infrastructure in many ways is the biggest obstacle limiting modernization in U.S. banking today. I think as a result, we've seen a few things. Number one, the gap between the community banks who rely really heavily on this legacy infrastructure and then the big banks who don't, that gap has really been widening over the past number of years, right? And community banks make up 95% of the banking industry. But the top 15 banks hold over 56% of the deposit market share, right? And that's actually up from 16% about 25 years ago, right? And the reason for this is because they really haven't had the tools to compete online. And when 96% of community banks actually rely on outside vendors for their technology, but these vendors provide outdated technology as well as an acquisition approach to innovation, they get left behind, right? And that sort of results in the gap. So at Mantle, we actually originally set out to build our own challenger bank. And we embarked on that journey. And then we started talking to a number of different banks about partnering. And that's when we realized that the bigger opportunity was actually in helping traditional FIs modernize. We knew that we had to integrate with the current system, i.e. the core banking system, and enhance that current system today without needing to change it, right? And that's really important because I think if you talk to a bunch of banks, there's a lot of fear and pushback migrating their core, right? And it may happen over the next 5 to 10 years, but it's something that won't necessarily happen today. And you have to figure out how to enhance the legacy infrastructure without the banks needing to ultimately change it today. So what Mantle has built is a fully white labeled account opening solution that allows you to open an account from anywhere at any time on any device. Importantly, our solution is actually core agnostic. So we've integrated with all of the major cores, Fiserv, FIS, Jack Henry, et cetera. It's built using a modern cloud-based API architecture, right? And that's what really enables us to update the platform, push features weekly at no additional cost versus, let's say twice a year. And it's also what has led to us being able to provide an industry-leading time to market, get these banks live really quickly. And, the reason why we started with account opening was because these, in many ways, the traditional institutions are naturally risk adverse, right? And when we were starting out, we really needed to build trust. So we saw account opening as our wedge because on the relative order of things, it's a lower risk product, but it's extremely high value. And we really saw that as our wedge to help them start on the path of modernization while still meeting their customer expectations. And look, compared with legacy systems, the performance that banks get, using a product like Mantle versus some of the legacy systems, we've been able to bring down the time to open an account from 20 minutes to 2 minutes, right? We've completely flipped conversion rates from 8% historically to 80%. We've been able to offer community banks and regional banks the ability to raise hundreds of millions of dollars within days, right? And you saw that, for example, last year when Cross River raised $250 million of deposits in 15 days. But part of tackling this problem is we really need to shift the mindset to show the value and the role of digital services, right? And number one, that comes with really viewing technology as an investment versus an expense. And also, mitigating the fear that a lot of banks have about losing the personalized approach when you go digital, right? And that's a lot of pushback you get why, banks have potentially historically been branch-based. But actually, if you look at it, the happiest customers want to and are able to leverage both the digital experience and the branch experience. And at the end of the day, as technology vendors, it is our job to make sure we are adding value. For example, how do we lower the cost structure to give banks room for innovation, right? How do we give banks more leverage to grow efficiently and give them flexibility to think about additional revenue streams outside of just fees, right? And we can do that by cutting costs by over 50%, bringing down the time it takes to open an account to an average of 2 minutes and 37 seconds. And, Quantic, which is one of our banking partners, where actually Patrick used to work and was the CIO there, is a great example of this, right? Once they went live with Mantle, over 95% of their customers started onboarding digitally, right? They lowered their cost of deposits by 40%. They basically completely realigned their balance sheet, and 99% of the liabilities were then online deposits. They were raising $5 million of deposits every month. They launched their Bitcoin rewards product, all of these really awesome stats. But all of these meaningful changes in the product was actually launched on top of the legacy FIS core. Right, so we didn't need to change the core. We, essentially built on top of the core and enhanced the core. And look, this is just one example of how we've helped community banks modernize on top of this legacy infrastructure. But at the core, that's really what Mantle is going after.
Yeah, very interesting. And kudos to the great work to date, and look forward to see what you're going to do going forward and what else is on the product roadmap. So. Thank you. Going to jump to the second round here, and we can go round robin here, but I think we'll kick off with, apologize, Sue, your question. Temenos. Temenos is a banking incumbent, so we're going to shift from hearing from these nimble startups to an existing banking tech incumbent and market leader. Walk us through your current view of addressing the challenges presented by today's legacy infrastructure and how you're taking advantage of them. And discuss how Temenos is partnering with disruptive startups as well.
Absolutely. Thanks for having me as well. Super excited to be on this really auspicious panel and going forth, because I took some wonderful notes from both what Patrick, Loveleen and Nathaniel were saying. I think what's really highly evident is that all customers want services from their financial institutions that are convenient, they want them to be relevant, they need to be seamless, frictionless, personalized, and they all want them now. And in order to truly achieve this, we need to be modernizing the full stack. We're seeing many organizations that are coming to market, FIs of all different shapes and sizes. You know, we're seeing the fintechs, we're seeing the challenges, the neos, the community banks, traditional bricks and mortar. We're seeing the tier ones. They're all coming with different challenges and needs. So we see the front to back. We see people coming to renovate the core only or just the digital front end. We're also seeing many institutions that are looking to stand up a brand new stadium next to their older stadium, picking maybe a niche line of business so that they can be going live and testing the technology, testing the relationship with the vendor, testing even the organization's readiness for that transformation. Temenos Software, we support all those different renovation journeys. Because of the open architecture, we enable our clients to have choice so that they really can be leveraging that best of breed and going with a mantle onboarding as much as we'd love them to go with ours, but we readily will integrate within that ecosystem to give our clients choice. But really, if I go back and summarize, in reality though, unless we truly digitize the full front to back stack, when we put an absolutely beautiful front end on, a wonderful customer experience. It doesn't matter how beautiful that front end is, if it's sitting on top of a brittle and legacy core, what we're in essence doing is putting lipstick on the legacy. You referenced there as well about how we are engaging with fintechs. I think it would be prudent of me to talk as well about how we've been working with crypto, explainable AI, because what we're seeing is a lot of our, from a software perspective, we've done many integrations, many POCs from both a crypto perspective and also Bitcoin. But where we're seeing a lot of traction is we're getting a lot of our clients and new clients coming to us, asking us to be able to readily integrate to a crypto, so that digital asset platform of their choice. Because of the ease of integration, we are readily able to do that. What we are then supporting is the actual fiat. So we're holding the deposit. We are then offering and completing their entire banking services that they need. Obviously, it's real-time integration and harmoniously works together. And we're seeing an increased amount of crypto interest as well. So what I would also just like to share as well from a XAI perspective, that we knew as an organization and over 2 years ago that in order to be truly digital, we needed to be investing in the AI and machine learning. And not just AI, but explainable AI. And where this really becomes important is if we think about what happened with Apple when they first launched their card, they went to market. And there was a scenario where a husband and wife both applied for the card. The wife had a higher credit bureau score. The wife had a higher income than the husband, and yet the husband was approved the card and the wife was not. This is where explainable AI is critical. It gives you the transparency. It enables you to explain the why behind it. Very much this will then help with that building that, the customer trust. And of course, it also helps with the regulators if they come in to be asking any questions. But for us to be truly, truly digital, it's all those components pulled together. So I hope that answered the question, Andrew.
Yeah, very helpful. And I know that Temenos has had a history of investing in startups as well and has been fairly successful on that front. Was wondering if you could touch on that briefly.
So we've invested. From a startup perspective, the company that we acquired for the XAI was Logical Glue. I say we just went out and purchased that one to complement our suite. But we've also been working with a lot of startups, fintechs that have converted. So if we think of startups that we've been working with, We have the pleasure of working with Grasshopper Bank. Grasshopper Bank was the first bank to get their new banking charter out of New York City. If we think of some of the change makers out there, we've also had the pleasure of working with Varo Money on the West Coast, who are out there doing a phenomenal job of banking the underbanked. And they were the first fintech to get their banking charter. And they're doing a wonderful job of blazing a trail of truly digital banking with Temenos Core underpinning all that ecosystem of digitization that they are leveraging to bring new products to market.
Great. Yeah, thank you. Great to see Temenos lead the way. Now we can jump to the second round. I apologize for that, Sue. The past 15 months have been an interesting time for everybody. What has your company learned in this new normal that we've been living in? And how has your business model changed? And so why don't we start with Patrick and go to Loveleen and then Nathaniel and then Sue.
It's been an interesting 15 months, no doubt. I think we all can resonate with that, good and bad. I think one of the things probably experienced the most from the standpoint of the business is that the realization that the U.S. dollar is highly volatile. I think it's probably been the most acute lesson. It was only a little over a year ago we have our first $1 trillion plan, and now we're talking about our third $1 trillion plan. And kind of realizing in anything that's a store of value, the denominator, right, is really important. And if the denominator is infinity, how does that work? And how do you stop what's already happened and what's going on, and where does it stop? And so how do I think about how I store my money over time? If I think $3 trillion plans in 1 year, what does that mean over 10 years and 20 years? And so that realization, I think, and kind of goes hand in hand with a lot of the interest, obviously, around Bitcoin. And you have something where the denominator can't be changed, right? And so as that realization and that awareness and that education and the printing machines keep going, probably the next thing that's happening is just busier and busier and busier in terms of trying to provide access to Bitcoin to financial institutions. So it's been a very interesting 15 months and a very busy one. It only seems to be getting busier, and fun hearing all the cryptocurrency even amongst this panel. Great.
Loveleen, how about you?
Go ahead. Yeah. So we've definitely seen through the pandemic the acceleration of and digital banking is no different. In our own portfolio, we saw 600% plus growth year over year in deposits, 250% plus year over year growth in spend. And at the beginning of this year, we're a public company now, but we ended the year at less than $1 billion in deposits, and we were at close to $1.5 billion by the end of March. So it is continuing. And what Patrick said, with the stimulus money coming in, we also had the privilege over the last year to distribute about $400 million in government sort of dollars to our customers as well, and give them that in a much faster, more efficient way to be able to access that money. So bottom line is digitization, has been, digital banking is no different. And a lot of the challenger banks that have been successful, including us, saw tremendous growth last year, which we only believe is going to continue. And I think that what we've already known is that every consumer in this world deserves financial services products and should have access to it and is a potential customer. And traditionally, banks have been the gateway to be able to provide that. And I think what is changing is that it shouldn't just be banks that have the opportunity to provide financial services, but every business, every employer, every government entity should be able to offer financial services. And so we see banking as a service, which is a pillar of our strategy, really expanding. And we feel strongly about the ability on banks as well as financial institutions that want to accelerate their digital strategies into the banking business and to be able to serve more and more consumers.
Yeah, great. Nathaniel?
Yeah, so when it comes to what have we learned from the last 15 months, I think there's primarily two things. Number one of the biggest takeaways we've had is that there are just many similarities between e-commerce and really the shift that is happening in banking. I think, obviously there's a lot of talk about branches closing, and I think we certainly hold the opinion that the number of branches will decline, but branches do remain an important, they do still play an important role for things like servicing and brand, but they are less critical to customer acquisition at the end of the day. So, I think it's been interesting to see, similar to e-commerce and some of these direct-to-consumer businesses that have then opened physical brick and mortar, locations in retail, we're starting to understand that it's not just about digital, it's not just about the branch. You need to have both of these that really complement each other at the end of the day and serve different purposes. I think we've also seen a shift in consumer behaviors, right? Particularly among the younger demographics, which have really been the driving force for modernization. We're at a point right now where 4 out of 5 people actually prefer to manage their finances digitally rather than in person. So it's really important to build technology that has both the banker and the customer in mind and really provide a streamlined experience for both. I think secondly, the COVID relief efforts have really created an opening for the tech-savvy community banks to really win back market share and build goodwill with the small businesses. I think what the traditional FIs witnessed were the operational benefits of using digital solutions firsthand, right? And the realization that modernization needs to happen. And modernization is probably sped up 3 to 5 years as a result, right? And that's amazing for our industry, right? That's going to lead to a lot of change and a lot of innovation. And Levine was talking about a little bit of that as well. And I totally agree. And so now banks are looking for solutions to really transition these relationships into longer term deposit relationships, right? And I think one interesting stat that the Fed put out was 61% of business owners were actually satisfied with the support they received from the small banks, but less than half were satisfied with the support from the big banks and the fintechs, right? And to me, what that means is that's a big opportunity to win back market share at the end of the day. When it comes to sort of business model and how has that changed, I think number one, and kind of touched on this, that there was a recent research put out by, I think it was JD Powers, that said customer satisfaction with digital-only banks is slipping, and the happiest banking customers were able to bank where and how they wanted to, right? So if they wanted to go in the branch, they go in the branch. If they want to go online, they could go online. If they want to use their phone, they could use their phone. And I think what this really means to us is you need to complement these different channels, and there needs to be a seamless cohesion between each of them, because ultimately we need to empower the banks to meet their customers where we are. So we are working on a number of products that can really help create this omni-channel experience and really bring together the digital as well as the physical experiences. And then I think, lastly, around the sort of PPP point, there's a lot of just community institutions looking to capitalize on the relationships that they built and turn them into longer term deposit relationships. This is a huge point of discussion with our current customers and prospects alike. And look, I think historically small businesses have actually been underserved from a digital banking perspective, right? And I think what's happened now is the COVID pandemic has actually accelerated that digital transformation in that area. So we see a big opportunity in helping, banks and traditional FIs, work with businesses and focus on things like business account opening, both online as well as in the branch.
Great. And Sue?
So obviously we've seen very similar patterns ourselves, with the digital side completely accelerating, and wholeheartedly agree that, the important thing out there is to be helping accelerate the needs for the consumers and the small businesses, because they've all gone through their own various hardships. So it's been wonderful to be working with some of our customers to be able to onboard those PPP loans and then to have the underlying core that's been able to do the servicing of the lending as well. I think if I really take a step back from a pure core transformation process as well, the one thing that we've really learned is that transformation and implementations continue despite the fact that we all had to very rapidly shift from being typically an on-site organization doing those transformation journeys, but do everything remotely. And once upon a time, that would have been completely frowned on or thought simply not possible. But within days, the model changed, not just with us, the agility of our company, but the agility of the clients we were working with. We had clients that went live through with extensive upgrades. We had clients that were procuring our software during the pandemic and went live during the pandemic without one business consultant going on site at all. So it's amazing how we've all learned to change the behavior and yet still laser focused on delivering success for our clients. And, you know, as much as many of us I know are travel warriors and miss that being out on the road and being with people in person, which for me has been a lesson learned certainly of the pandemic too. But there's also cost benefits to our clients by not having those additional costs of having to travel for this. I believe going forward, there'll likely be more of a hybrid model, but it's certainly demonstrated, you need to learn fast and change so that all our clients can get the best out of the software and services that we're all providing. I think if I just look at the various, comments that everyone else has said on the panel, the common theme that I'm really feeling amongst us all is that between us all, we're really all just looking at collectively of ways of which we can be finding how we can help make banking better together for all our clients, no matter where they are in that digital transformation journey.
Yeah, great. Thank you, Sue, and nicely put. And why don't each one of you talk about what you're doing today, what's keeping you up at night, and what you're doing to maintain your competitive edge. And Sue, why don't we start off with you?
Wonderful. So from a Temenos perspective, we're 28 years young. One thing to share is obviously this isn't the first pandemic that we've been through or global crisis. And with each one, we've come through them stronger and stronger. And a lot of the reason why we've been able to achieve this is that we continuously invest 20% of our revenues back into the one platform that we have. We've not only been investing in the product, and as a product company, that's incredibly important. We've protected the 20 years investment into our product whilst at the same time investing heavily into the technology as well. And this leads us today to be sitting here sharing with you, that we're cloud native, we're cloud agnostic, and we're API first. As part of that, we also do strategic acquisitions, such as what I was sharing with you earlier about the explainable AI, because this is the best way that we can be future-proofing not only our investment, but also the investment that the clients make with us that come on this transformation journey together. And in essence, what we're really achieving by doing this is, the way we like to put it, it's that winning combination of banking expertise, because we're laser focused just purely on the banking services, coupled with advanced cloud and AI technology. And you know what? We're always learning, we're always changing, we're always looking at what next we have to do to continuously improve. And ultimately, this is how we stay competitive.
Great. Nathaniel, what keeps you up at night? With a big fundraise, there's now probably 10 other startups that have been founded since then, focused on what you're trying to solve. So walk us through how you view the competitive landscape and what keeps you up at night.
Yeah, look, I think at a high level, just sort of looking at the sort of landscape and ecosystem, last year, banks actually grew their profits, right? While a lot of the challenger banks and digital-only banks really suffered for a period from a revenue perspective, Bank Mobile excluded, right? It sounds like they actually were able to get profitable, which I think is actually few and far between. But it showed a lot of resilience of these more traditional banking models. So we are very bullish on the community banks and the regional banks and really helping solve and close that technology gap, because I think a lot of these fintechs and that are sort of popping up are really just banks at the end of the day that with a somewhat poor business model. And despite the sort of record growth in funding for neobanks, I think once you see valuations come down, there's a potential reckoning that could be happening. And I think, part of Mantle's success can really be attributed to shifting the mindset around the value and role of digital services in banking. Currently, many community institutions view technology as an expense versus an investment. And when you view it as an expense, you're trying to minimize your cost for that piece of technology, but you're not thinking about the right things. It's almost an existential risk, right? What happens if you do not modernize today? What happens if you do not invest in technology today? You may not be around in the next 5 to 10 years. So we overcome this challenge by really taking a consultative approach to selling, focusing on the business outcomes versus just the technology that's driving it. And look, I think the platform speaks for itself. It enables neobank levels of efficiencies with unmatched ROI. We quickly become every bank's financial top performing branch. And we also understand the core banking systems better than the firms that we built them. So we're excited to continue to tackle these problems and hopefully get even deeper and deeper down the stack.
Great, thank you. And we're close to the time, but
yeah, we're going to have to leave it there. We have run out of time, so I apologize. But I think this was a great panel. So thank you, Andrew. Thank you, panel, for a great discussion.